Hello and welcome to Earnings Central. I'm Ekta Batra. We're in the middle of the earnings season, and today we have two big banking giants. We have Kotak Mahindra Bank, which released its numbers. Let's listen in to the press conference.
Employees, which has resulted in the employee cost showing a sharp rise in this quarter over the last year, and similarly over the last quarter. On the other part of the cost, we continue to invest in the technology area. And in the current quarter, we've also had a promotional spend which has been higher. On a pre-provisioning profits, we ended the quarter with 4950 crores, which is about 78% higher than what we did in quarter one last year. And we had a provision this quarter of 364 crores, which takes us to a pre-tax profit of 4585 crores, which is 66% higher than what we did in Q1 last year. And as I said, we ended with a post-tax of 3452. Our balance sheet size at the bank now crossing 5 lakh crores. On the asset quality, our GNPA this quarter is at 1.77, which was 2.24 a year ago and 1.78 a quarter ago. Our net NPA now at 0.4% is against 0.62 a year ago. SMA2 continuing to be small number at 203 crores, which is SMA2 with respect to funded exposure of clients who have exposure of over 5 crores. On overall advances, we've seen 19% growth on a YOY basis and about a 4% growth on a quarter-on-quarter basis, not annualized. For the year, we've seen growth coming across the board in the consumer lending activities, in the agri lending. This quarter, of course, we've seen growth coming in the consumer lending, and we've seen the corporate book also grow up. On CASA, we closed this quarter at 49%. We relaunched our TD sweep in the form of active money in the middle of this quarter, and we've seen significant traction there. We've seen the TD sweep amounts rise by 24% this quarter, which is not an annualized number. So it has gone up from about 23,000 crores as of March end to about 29,000 crores at the end of June. So that's a traction which is continuing, and that takes the CASA number at 49, plus the TD sweep, which accounts for another 7.5% of our total deposits. Our capital adequacy at the bank continuing to be strong, 22.02 at an overall level, including this quarter profits, and 20.9% for CET1. Our ROA at the bank now for this quarter annualized at 2.81%. So that's been broadly the story at the bank. At the consolidated level, we've seen a profit at 4150 crores for this quarter, which is roughly about 50% higher than what we did a year ago. Apart from the bank, large contributions coming in from Kotak Securities, 219 crores. Kotak Prime brought in 218 crores compared to 157 crores last year. Last year in quarter one, they had taken a hit of about 100 odd crores due to change in accounting policy on brokerage incomes. Kotak Life ended this quarter with 193 crores, whereas the Kotak Investments, the other NBFC, brought in 102 crores. The mutual fund and the trustee company together brought in 106 crores of profits as against 192 in the previous quarter, some capital gains. The microfinance business correspondent company, BSS, got in 95 crores of post-tax profit for this quarter. Our insurance entity saw increase in gross written premium as well as the new business premium of roughly 17% on a YOY basis. Kotak Securities saw a market share gain from 4.2% last year to 7.5% this year. Our overall assets under management at the group level now at 4,66,000 crores, roughly about 23% higher than what we did last year. Apart from domestic mutual fund, we've seen sharp rise in alternate assets, where we now manage close to 46,000 crores as against 24,000 a year ago. We've also seen in our offshore funds big numbers coming in. This quarter we closed with 38,000 crores. In fact, this quarter in our India mid-cap fund, we've seen $600 million of additional funds coming in there, which now makes India the India mid-cap fund among the largest India dedicated active fund available offshore. Our advances in the subsidiaries in Kotak Prime, the vehicle side has seen a 31% growth in advances, whereas in the Kotak Investments, the overall book has gone up by 50%. Our overall net worth now at 1,16,000 crores, with a consolidated LCR at 122%. And with these quarter profits, we would close the current quarter at a book value per share of 584. Our ROE at consolidated level for this quarter annualized now at 14.6%. So that's broadly the highlights of what we did this quarter. Rohit will be open to taking questions.
Thank you, Jaimin. I see Ritu Singh from CNBC's hand going up first. Ritu, you can ask your first two questions, please.
Hi, Jaimin. Quick word on the quarter. 1,205 crores higher than we usually see for the bank. Where did this come from? And yes, I understand about 288 crore has already been upgraded. The second question was on your retail loan growth, a bit softer for the quarter. What's the reason for that, and any outlook you could give us on the kind of loan growth you expect through the year? Thank you.
So if you look at the slippages, yes, of the 1205, you're right that 288 crores have actually got written back in the current quarter. So people who slipped in the quarter and upgraded themselves during the quarter itself. So the net number is about 900, a tad higher than what we've seen in the previous quarters. If I look at segments, we had the retail segment, the unsecured ones, which had a dip. And we had some tick up in the tractor segment. So those would be the two ones which saw some increase from what the numbers we had seen some time ago. On the overall loan growth, first quarter is typically a softer one. But if you look at the overall loan growth, we continue to maintain that we should be targeting anywhere from 1.5 to 2 times the nominal GDP growth of the company as our growth, so, which will take us to a number in the high teens or the 20s.
Jasprit, Ritu, you still have a question, your second question?
Yeah, sorry, I missed the part. You said slippages came from tractor segment loans, and what was the other part of it?
Retail unsecured. Credit card.
Were there any larger corporate slippages in the quarter as well?
Nothing on the corporate side.
All right. Thank you. And a word, if you could, sorry, if I may add, give us on what your internal assessment is on what your ECL provisioning requirement would be as and when it kicks in the future.
We've done our numbers.
Provisions.
ECL requirements, whenever it comes in, we've done our numbers and we're doing it consistently. It's a small number where we will have to provide higher than what we have today. If you break up the ECL, there is stage 1, stage 2, stage 3. On stage 3, what we have provided currently on what is equivalent to the NPAs is significantly higher currently, which carrying that provision compared to what's required. On stage 1, stage 2, we may be required to do a little more. So on a net basis, we are a few hundred crores, which is what we will need to provide.
Thank you, Ritu. We'll come back to you again. Jasprit, you can ask your questions, please.
Hi. So I had a couple of quick questions. The first one being, if you compare the corporate loan growth rate, which is about 9% year on year, as compared to other segments like home loans, which grew at 18%, even on a larger base, any reason for the laggard growth seen in the corporate loan segment? Is it some of it coming from pricing? You can maybe address that one first, and then I'll ask my second one.
This with on the corporate side, you must not look at just the corporate piece in isolation. You must look down also on the credit substitutes and on the IBPC and the BRDS. Yeah, ultimately the IBPC and the BRDS also are corporate loans, which basically get deducted from the overall asset side. Really, if you look at it in totality, yes, it still is low in comparison to what you see on the consumer side or even the commercial side. But there is a very significant uptick if you see on a sequential quarter basis. Just the straight line, if you see on the corporate bank side, while it looks 9% on a sequential quarter basis. It actually 7%. Yeah, so there are downs which are there, but it's looking okay.
Okay, all right. So that is the management of Kotak Mahindra Bank addressing the media with regards to their Q1 performance. In fact, it has been relatively good because they have had their gross NPA ratios, which have come in at the lowest level that we've seen in 32 quarters. And their ROA continues to remain robust at around 2.8%. Abhishek's been tracking these numbers. He's here with us in the studio. Abhishek, tell us more. How did Kotak Mahindra Bank look? Has it beaten estimates?
Well, very strong set of numbers, especially on the deposit growth. Now, one key highlight that I would like to mention is that across Kotak Mahindra Bank and ICICI Bank, the key point to note is that the deposit momentum is pretty robust. Take a look at the deposit momentum for Kotak Mahindra Bank on a sequential basis is at around 6.4%. For ICICI Bank, it's around 4.9%. This compares to HDFC Bank growing their deposit base by 1.6% on a quarter-on-quarter basis. So they have made the hay while the sun shines is that, phrase going on for these two banks. So deposit growth 22% YOY is perhaps the best in last 16 quarters and 6.4% sequential growth is perhaps the best in last 13 quarters. ROA that continues to remain robust, 2.8% ROA, one of the best in the banking sector and currently also at record for Q1. Net interest margin remains strong at 5.57%. Sequentially, it's declined, but that was on expected line, and 5.57% is perhaps the best among large banks as well. Gross NPA ratio is the lowest in last 32 quarters, coming in at 1.77%. The restructured book of just 0.19% shows that, stress is coming down. Restructured book is the lowest in last 3 years. Consol ROA and ROE, that also remains pretty strong. What has not worked in this result is that the retail segment growth is a bit soft at just 2.2% quarter on quarter. The subsidiaries performance is weak, or you can say a bit soft, given the fact that, PAT has declined by 0.4% quarter on quarter for all the subsidiaries taken together. Slippages have increased sequentially. That's largely to do with the fact that seasonally Q1 is weaker than Q4, and CASA ratio of about 49% is the lowest in last 22 quarters. However, in terms of P&L, both the NI and PAT is a beat on our poll. Back to you.
Okay, all right, that's on Kotak Mahindra Bank. But Abhishek, the other big bank which will be reacting to its numbers and will probably help in terms of a cue for the markets as well is ICICI Bank. How did that perform?